A stock trader explains his free proprietary stock trading. A stock trader explains his free proprietary stock trading. All right. I want to clarify with trader one more time my free proprietary trading tool. I have other proprietary trading tool that I will now share with the public. But this proprietary trading tool, I have been talking about it for some time, and I want to analyze stock, Toll Brothers, Epic TOL, Tango Oscar Lima. This is a Russell 1000 component, Toll Brothers Incorporation, and or Toll Brothers, whatever. And we want to apply my free proprietary stock trading tool. All right. Whenever you are building a trading system or a proprietary trading tool, you must start with a market principle or market stable data. Talking about this free proprietary stock trading tool, it is based on the principle that if a financial instrument is rising or declining, it will be going up, okay, in a diagonal move. So this is a diagonal price move. On the other hand, if a stock is going down, you go down again in a diagonal move. Similarly, okay, you go down in a diagonal move. This is a normal price progression. So in a normal price progression, the price will go down or up in a diagonal. Okay, so here it is here. By going up, this is a diagonal, yes or no. So it's normal price progression here. All right. Now the abnormal market progression is where the price start going up vertical. See here, this is a vertical price move. All right. So this is abnormal. Okay. All right. This is not the normal price progression. Okay. So those are the market principles that are used, okay, to create this free, okay, proprietary stock trading tool. All right. So whenever we see a normal price progression followed by a vertical price move, there is a high chance, not a certainty, it's not guarantee, there is a high chance that the stock will pull back to the opposite diagonal. What is the opposite diagonal? So price went up in a diagonal move, we draw a line to highlight it, which is this line here. We'll also highlight the vertical price move, which is this line here. You can see I can move it now. Now I draw it up and put it back. Okay. And then we draw a kind of a rectangle. So this, you see the vertical move. You project it at the beginning of the diagonal price move. Right there. So you have a line here. So you project the vertical price move at the beginning of the normal price progression. Okay, so this is the vertical price move here. Okay. And we project it at the beginning, which is this line here. So you see it's exactly the same length. Okay, same length. Okay, or a little bit down, the same length. Okay. You measure the same length. And you project it at the beginning of the normal price progression. And then this line here, the normal price progression, okay, you project it at the top, okay, to join the 2 point to have the triangle, to have the rectangle, or as we say in French, the losange, okay, it's a losange, or parallelepipède, or what? This is a losange, n'est-ce pas? Or parallelepipède, okay. Now, to have this kind of rectangle, okay, so you get the idea. So once you have the rectangle, you will draw the diagonal of the triangle, this diagonal here. See, this diagonal, you draw it. See, so this is the diagonal of the triangle. The opposite of the diagonal is when we move this line here, that's the opposite. A line that is directly opposite to the normal diagonal. Alright, so this is the diagonal here, and the opposite diagonal is the line that is directly opposite to the normal diagonal. So when we have a normal price progression that is followed by a vertical price move, there is a high chance the price will pull back near, okay, the opposite diagonal. Here you can see that it did not change it. It did not touch it like this. Okay, did not touch it. All right? Sometimes you'll see you come and touch it. You can combine this free proprietary trading tool with Fibonacci retracement. So you can see the price was going up from here. So start going up, normal price move followed by vertical move. Okay, so if for instance the price touches the opposite diagonal, then you can apply Fibonacci retracement to know how far. Suppose this one went all the way down here, that will be 78% Fibonacci retracement level. Usually we have a high probability trading setup on the edge of the opposite diagonal. Sometimes you will see that the price will touch the opposite diagonal many times, 2 or 3 times. So you touch it here, you bounce up, pull back again, touch it, bounce up, and touch it again. Sometimes you have multiple touches where the price is touching the opposite diagonal. There's another level that you need to watch, is the intersection between the normal price move and the vertical price move. That point is here. The intersection between the normal price move and the vertical price move is here. So you will draw an horizontal line at that point, which is the line that I have here, the black line. So sometimes as the price going down from after the vertical price move, if it start going down, it's seeking to touch, okay, this horizontal line, which is the intersection of the normal price move and the vertical price move. Here it is, see here, boom. Can you see how the price come to touch the intersection, the line that we draw to the intersection point between the normal price move and the vertical price move? Here it is, touch here, bounce up. All right, and sometimes you can see you come all the way down. There is another level that I told traders to watch. So you have the horizontal line, which is the line that we draw to the intersection point between the normal price move and the vertical price move. So I'm going to color it now into orange, so you can see on my chart. And now this is the opposite diagonal that I'm going to color now into pink. All right, here it is. So sometimes the price, so most of the time the price will touch the horizontal channel, the horizontal line, boom, bounce, and come back and touch the opposite diagonal. All right. Or sometimes all we need to do is to draw a line, a media line. It's quite difficult to do that through the media line. You see the angle here? You see this angle here between the pink line and the orange line? Draw a media line through this angle. You see, this is the line that is dividing the angle between the horizontal line and the pink line, yes or no? So you draw the media line of that angle, and as you can see, if you did that, see how the price is touching that media line? Boom. First time here. See here? Boom. Beautiful, isn't it? Here it is. Boom. One more time. A third time here. Boom. All right? You may see that. So in normal condition, the price will try to retest the opposite diagonal. The first thing that we will do is try to touch the horizontal line that we draw to the intersection point between the normal price move and the vertical price move. But if you reject it, if it's going down below the horizontal line, watch the media line between okay, the opposite diagonal and the horizontal line. This is about okay, a stock trader, all right, explains his free proprietary stock trading. All right, so we can apply this strategy for stock, for commodity, for silvers, for gold, for futures, for currencies. All right, normal price move should be diagonal. Vertical price move is abnormal. It's a distortion to a certain degree. There will be a correction. That correction may push the price down to the horizontal line, which is the intersection between the normal price move and the vertical price move, or the median line between the opposite diagonal and okay, the horizontal line. The ultimate target is the opposite diagonal. So you will hear me sometime in my video. I'll be talking about normal price move, diagonal move, vertical move, retracement to the opposite diagonal. So if you hear me talking like this, you know that I'm referring to this free proprietary trading tool. You may see this on the hourly chart, especially those who are trading currency, where we have a major economy news, we have normal price move. As the economy news release, you see a vertical price move on the hourly chart. You may see that if you're trading currency, and then you can implement this strategy. Okay, when the price touching those lines, do not use them as a trading signal. Those are trading setup. Implement a top-down trading method to trade it. Don't just buy because the price touching it. Okay, implement a valid multiple time frame trading method to trade it. If you have any question or suggestion, put it in the comment section, and in due course I will be busy recording another video to answer your specific question. We are the TSTW24 traders talking about stock trader explain his free proprietary stock trading. Happy trading to you all, and speak to you soon.